We did come very close in 2019 to the entire financial system freezing up globally, and who knows what would have happened. Hi, this is Mike Maloney, and I've got Adam Taggart with me once again. Adam, how are you doing?
I'm doing great, Mike. Great to be here. How are you doing?
Excellent. So there's this story by Pamela Martins and Russ Martins on Wall Street on Parade. What do you think of this? This is about the repo crisis that was happening back in 2019. And it was some huge meltdown that was going on that the Fed was able to paper over and keep secret.
Yeah, we talked a little bit about this last time I was on, Mike, and thank goodness for real gumshoe investigative journalism like the kind being done here by Pam and Russ Martins. Back in 2019, we knew something was going on under the sheets there. I mean, we knew that the numbers that were flooding into the repo market every night, were gargantuan, like nothing we had ever seen before. But we weren't being told anything, and it was being put off as like, everything's fine. Well, now we're actually beginning to get a sense for the order of magnitude of the trouble that a lot of the country's biggest banks were in. So, Mike, looking at the charts here, like how much is the cumulative total that these banks received during that period?
Well, it's pretty gigantic. But before we get to that, I just want to show everybody a chart of the repurchase agreements. This is the Wednesday level. So the middle of each week, the Fed reports the Wednesday level. And normally this is intrabank lending. So everybody needs to understand what repos are. And a repurchase agreement is one bank needs some cash. They need to borrow. They put up a bond and they agree to repurchase that bond, usually in 24 hours, the next day. You see them going along here, and then the Fed just completely stepped out of the repo market, and the repo market was all basically the free market controlling it, the banks determining what the rates were and stuff, and then suddenly the Fed jumping back in. So you can see the scale of it from the Federal Reserve reporting. But Pam and Russ Martins, they're talking about normally these loans are one-day repo loans. But very, very often they're rolled over day after day after day. So basically, it's a 24-hour loan that gets paid off 24 hours from then by financing it with another loan for 24 hours. And so during this period of time, the Fed added 14-day, 28-day, and 42-day loans. So if their example here is, let's say a trading firm took a $10 billion loan for one day, but that same day took another $10 billion for 14 days. The 14-day loan for $10 billion represents the equivalent of 14 days of borrowing $10 billion, or a cumulative total of 140. I'm not sure that this is. I'm not sure whether. I mean, maybe this is correct way to look at it. Maybe it's not the correct way to look at it. There's 10 billion outstanding at all times on this loan because it's getting paid off. If it's the equivalent of 14 days of borrowing $10 billion of those 24-hour loans, if there was 14 days of borrowing those loans, they get rolled over day after day after day. And so it isn't 140 billion. Nevertheless, there's different ways of looking at this accounting wise. It is shocking. Even without the multiplication of looking at it, using this other method of cumulative total of if they took this $10 billion loan that was for an extended period of time, how does it compare to a 24-hour loan for the same amount? Is it cumulative or not? Without that multiplication, it still totaled $4.5 trillion, which is an enormous amount. This is a huge fraction of the U.S. currency supply. That the Fed, remember, the Fed invents this currency when they make the loans, and then the currency gets extinguished when the loans are repaid. Now, if you do this multiplication by accounting for the number of days that the loan is outstanding, then you're talking about just under $20 trillion. That's close to the entire currency supply. I mean, you got to look at M2 or MZM or these different aggregates of the currency supply. What's your take on it?
Yeah. So, Mike, I think just to clarify this for folks, I think this is financial life support for banks that are in trouble. The Fed's role is, for better or worse, is a lender of last resort. And if you look back at the chart that you put up there, you see that basically the Fed steps in with excessive repo support, when the system gets into trouble. So you can see in the last recession back in 2008, it spikes and then it comes down, and then it basically goes away before we exit the recession, because by that point, a lot of the challenges that we were dealing with were beginning to resolve. Then, of course, at the end of 2019, it explodes out of nowhere, which is a signal that somebody was in really big trouble. Somebody was being kept alive by being given huge loans day after day after day, or as you said, Mike, they began to extend them by like a week loan or a several week loan or whatnot. But make no mistake, that's life support keeping a big player or multiple big players alive who would otherwise die essentially without that free money. I just want to share that we saw this back in 2008. This report by the Martins says, back in 2008, Citigroup was insolvent for much of the time the Fed was flooding it with cheap loans. I think that's what was going on here. You had banks that were in danger of becoming insolvent. And just looking at this chart, Mike, that we sort of reacted to in the first place when we saw this report, Nomura, JP Morgan, Goldman Sachs, et cetera, received a cumulative total of $8 trillion from this repo program. And you're seeing like Deutsche Bank got over $1 trillion. Barclays got $1.5 trillion. Same with Goldman. Nomura got almost $4 trillion. So I think there was something going on in the banking system where these major banks were all of a sudden in danger of getting caught with their pants down and maybe having a Lehman type moment. And the Fed came in and just kept them alive with this life support for long enough for the problem to get contained. And maybe that's the right thing to do for the Fed, maybe it's not. But the fact that we weren't told about it and how close apparently we came to some major systemic breakdown, I think is really concerning.
The thing that this shows, we did come very close in 2019 to the entire financial freezing up globally, the entire financial system freezing up globally. And who knows what would have happened. But this was the first chart, it shows Nomura, JP Morgan, Deutsche Bank, Citigroup as being the big ones, and Goldman Sachs not really taking that much. But when you do what Pam and Russ did as far as multiplying this out, basically it's taking the amount times the term of the loan. You see that Goldman Sachs had to have capital for they had the capital for the longest period of time. Between those banks, they took the least initially, but they held it for a very long time. And that's what this multiplication does. So it really does point out who was in the deepest doo-doo. And it was Goldman Sachs, JP Morgan, and Nomura. But
right. It also may be instructive, too, in terms of why the stimulus that was flooded into the system the next year in 2020 was as gargantuan as it was. It might have been using the pandemic as a bit of a smokescreen to be able to feed a lot more support into these institutions to make sure that they, remained alive through it all.
Yeah, it also shows that one of the things the Fed had said that this was due to tax season and end of the year, and these banks needed currency. But the thing is that Nomura, Barclays, and Deutsche Banks are trading affiliates of foreign banks. And so Pam and Russ say, are we really expected to believe that the U.S. corporations are holding their quarterly tax payments with the trading units of foreign banks? Because these foreign banks needed the bailout. And so this smokescreen, basically lie that the Federal Reserve came up with to try and calm the public down. Oh, it's just because they owed taxes. No, there was a real serious meltdown going on here. And, in closing, they say that the Senate Banking Committee and the House Financial Services Committee, it's time for them to haul the relevant parties into a hearing and get to the bottom of this. What was this, and why is this stuff happening? What it shows is, if this is happening, it shows that the banks are not stable, that they are taking on far more risk than they should be taking on, that these fiduciaries, trusted financial institutions that have a responsibility, are being they're pushing things to the edge because of competitiveness. They have to try and out profit each other, and that competitiveness leads them to walking this razor's edge of global financial meltdown, maximum profits.
Well, Mike, I think this is a great segue into our next topic here, which is the tweet of the day. Real quickly before we do, though, folks, if you haven't already, please hit the like button and subscribe to this channel if you haven't already. But Mike, a common theme that we rail about here that this banking data, I think, just puts in a real bright light here is the fact that there's just such a lack of transparency of what's going on, where the public is really being kept in the dark. And then you've also got a lot of decisions being made, in the system by people who, at least on the political side, who maybe don't know all that much about economics and the fundamentals of capitalism. And there's a fellow in Canada, one of the MPs there, a guy named, probably going to butcher his last name here, but Pierre Poilievre, who has sort of exploded as the sort of shining star of demanding accountability and really kind of bringing financial and economic literacy to the forefront of the political debate. I've been watching his videos and been really impressed by him, but there's a wonderful one that he just came out with. I wonder if maybe you could opine on briefly.
The text on his Twitter feed says each consumer talks with millions of workers and businesses each day, not by Wi-Fi or radio frequency, but through price signals. And we do. We vote with our wallets. And so we're talking with every business that when we buy something, we're talking with all of those businesses when we select one brand over another. And we're talking with the workers. And he says we do this through price signals. But if you scramble that signal with inflation, the economy goes haywire. And throughout history, that's what shows. You can create a little bit of inflation and steal from people very slowly, like the world's central banks try to do. They try to just steal from you very, very slowly. But this is something that's a very difficult thing to control. And when it gets out of control, you see that inflation does cause the economy to just go absolutely haywire.
Well, absolutely. We've talked about all that a lot. Pierre's, that video, folks, I recommend everybody go watch that video. It's actually basically like a economics and monetary theory 101 digest. I mean, it's elegant in how accurate and articulate he is, and really explaining what the role of money and currency are and how they should work, and what happens when they get abused. And Canada's seeing all the same types of inflation issues that we're seeing now. To me, he really harkens, whatever your political persuasion is. I think most people hold a respect for guys like Ron Paul, who were basically trying to bring the debate back to the actual fundamentals of how our economy and how our monetary system are supposed to work and what happens when they get out of whack. He's basically bringing that same focus and accountability to the political process there in Canada. And really the truths that he's talking about are universal. They're not limited to Canada. They apply the same to the US and many other world countries. So folks, if you haven't go watch that, go watch it, but watch a couple others, because there's some that are just, they're humorous in such a depressing way, where he's trying to get answers to basic questions about things like, I remember there's one proposal basically to give $8 billion worth of stimulus to some program. And he spends about 5 minutes trying to ask the 10-member council, like the finance committee, okay, well, where's that money coming from? And he just can't get an answer from anybody on the committee. It really just shows how kind of Kafkaesque a lot of the capital allocation that goes on in politics really is.
Yeah. Yeah. So the next thing we've got is the relationship. This is Ole S. Hansen, and the relationship between gold and the 10-year yields, real yields. So the yields minus inflation is beginning to look a bit stretched in the opposite direction. Gold's quite impressive behavior above 1800 is being supported by U.S. growth concerns, falling stocks, and geopolitical concerns. And this is a great chart that he's got here with an astounding correlation. This is just amazing. Now, this only goes back to March of 2020. Sometimes you take a chart that has an astounding correlation for a certain period of time and you go back a lot further and you find out that the correlation isn't quite that strong. But what it shows is that, right now, the Fed is talking about raising rates. Now, what's interesting, if they raise rates and they draw down the Fed's balance sheet by destroying currency, then the real yields could go positive again, which is a big negative for gold. So this could be Brent Johnson's milkshake theory coming true, where if the Fed raises rates and the ECB and the Bank of Japan and so on don't, then the US Treasuries become very attractive. And that causes people from around the world to sell off foreign debt and buy US debt. And to do that, they've got to buy it with US dollars. And the demand for US dollars pushes the dollar higher, which would push gold lower. Now, a lot of my followers do not want to hear that. They don't want to hear that gold could go lower. To me, it's just another buying opportunity because I know there's going to be another crisis. There's always one out there in the future. We just don't know when it's going to hit. And that is when the milkshake theory ends. It'll go on and then it'll come to an end. The currencies, what you're going to see is the one true currency, money, gold and silver, those currencies, those will outperform everything else. And that will be the measurement, the standard that all of the currencies get measured by.
I completely agree. I think that, it's interesting because you're right, Mike. Dollar strengthens, that tends to be bad for gold. Real interest rates get more positive. That tends to be bad for gold. What's interesting to me, though, is that the real interest rate has become so deeply negative over the past 12 months, right, as inflation has raged. But gold is trading lower today than it was a year ago when inflation was just 1.4%. Now it's at 7%. So there's a little bit of that tracking of the gold price to real interest rates hasn't been mapping as closely in recent times as it has in the past. And this chart you've just been showing here does show a bit of a gap there. So it is interesting to see what's going to happen, right? I mean, the Fed is saying it's going to raise rates. It probably will, but that will bring assuming inflation stays where it is, that'll bring the real interest rate up, but it'll still be negative, maybe even quite negative. So it's going to be interesting to see what happens here. And there are potential circumstances in where the dollar can rise and the gold price can strengthen. It's not a frequent correlation, but it has happened at times in the past. So all I'm saying here is I agree with everything you're saying in generality, but I think we're entering a period of time that might be sort of turbulent enough that some of those long time correlations may not break, but may bend a bit.
Yeah. So moving on, we've got some viewer feedback here. from Du Bois 6400. And he says, dittos, Mike. Atlas Shrugged, he read it at age 22, completely changed my life too, and continues to be the greatest impact on me 50 years later. I read everything from Ayn Rand and joined the club. The Objectivist was the club. The Objectivist. He said the objective here.
Right.
Unfortunately, the movies are horrible. Dan and I were invited to the premiere of one of there was a trilogy that was made, and they were very, very nice. They paid all of our expenses and everything to bring us to Las Vegas. And it was a great crowd, but yeah, it's unfortunate that Atlas Shrugged being made into a movie. This is the reason Ayn Rand, when she was alive, would not allow it to be made into a movie, because a couple of her books had been made into movies that didn't come off that great. Mm-hmm. And that trend continued. But it's very interesting if you read Atlas Shrugged today, you can see people like Elon Musk in there as main characters. It really, you can translate this story that's really, from the industrial age, not the computer age. They're talking about trains and steel mills and stuff like that. You can translate that right into today, and you can see bureaucracy and the government putting hurdles in businesses' way and changing the rules on you and making progress difficult. And so Atlas Shrugged is still very pertinent today. And if you haven't read it, for the audience out there, if you haven't read it, I would suggest reading it. It is a good read. It's tough at first, but then it gets great.
Well, I completely agree. And just like the submitter here, I read it at age 22. It completely changed my worldview. It still shapes very much how I think about the world today, all these years later. And not just because my last name's Taggart and the protagonist, Dagny Taggart. I get questions all the time as to whether she was my great aunt Dagny or whatnot. But despite the similarity of the last name, aside, it's just, I think, such a effective way to look at the world. And I think, her whole battle basically between the leaders of real production and value creation and just sort of the parasitic looters, the sort of socialist mindset of the state. And remember, Ayn Rand escaped, literally escaped from communist Russia. So she really knew the evils of collectivism. It's scary. It really is. It's scary in a frightening way how many parallels you can draw from that story that she wrote, however long it was, 80 years ago or so, with what's playing out on the ground right now.
Yes, and you mentioned the looters. She gave a name to all of these people, the moochers and the looters. There are people that are moochers, and then there are people that just flat out steal from you. And this seems to be government's job. And lastly, we have our meme of the day, and this one is about journalism. Adam, you made a great comment about this. What is it?
Well, I think this is a great job in just showing what's happened with our media in this country and most countries worldwide. It used to question authority, but now it simply just amplifies its message. So kudos to Dan Rubach, your producer, for finding this for us. I think that sometimes a picture's worth 1,000 words, but we need people like the Pierre Poilievres and stuff of the world to be asking these questions, because our media isn't doing it. And I think that wraps it up for the week, Mike. Thanks so much for doing this.
Thank you, Adam. We'll see you next time.
Take care.